Today is Sunday, March 23rd, 6:45 p.m. Eastern Standard. Let's take a look at the weekly setups for the week of March 23rd, 2025. So not much has changed since last week's report on March 16th. We were looking last week at cocoa, which was set up long. Lean hogs was set up long. The yen was a short. Soybean meal was long, crude oil long, and then we were looking at silver and gold for momentum trades. So the major difference that I highlighted in the midweek report last week was we were actually looking at going long silver, long gold, and then I decided to change that to short silver and long gold. And that is actually an order I am having filled right now. We are going to be shorting silver and going long gold. It's a hedge. I'm placing my bets on silver heading lower here as we're near this $35 resistance, and we've seen it actually start to roll over. And gold, I think with the uncertainty of the market and also the commitment of traders data that we've looked at, is actually still indicative of gold heading higher, with silver actually heading lower. And if we look at cycle forecasts, we also can predict that silver should probably be declining for this quarter, and then gold should probably continue higher. So I'm going to place the hedge trade of gold, long, and short silver. And then that's a momentum trade with a hedge. So momentum gold is flagged as a buy, and then we're hedging with short silver. As far as the commitment of trader data, the contrarian reversal system that we follow, we remain short the yen. We remain long crude oil. And we also remain long soybean oil, which is actually not, or soybean meal. Soybean meal, here's ZM, which has not been a very good trade so far. We actually had bought, and then it had 4 down days in a row, broke below 300. Not looking too good, not a good start on that trade, but I would like to get another position in crude if we see any sort of a decline back below $67. But right now we're in a good profit there. We're in a good profit on the yen as the market is opening higher and actually gapping up. This is what I looked at right on the open here. It's a nice little gap up. We may see that gap fill. Most gaps do fill, but it is a pretty good indicator that we're going to head higher here to start the week. So yeah, I mean, if we had to place predictions, I think this week could be an up week. And I think a lot of people, from what I'm reading and seeing, are expecting these tariffs to go into effect in early April, which is, I believe, next week if we look at the calendar. People are expecting tariff news to go into effect. You'll have to excuse my notifications here. Yeah, people are expecting these things to go into effect on next week. So the volatility may lower from that, or it may go up because of tariffs. I think a lot of people are planning on this market going down, and if we do bounce, I highlighted this last week, if we do get a bounce, we'll hit that 200-day moving average and then head lower. I expect the pain trade to play out over that. Pain trade, in my opinion, is we just rip through the 200-day moving average. It doesn't act as support at all. It actually just rips everyone's face off here, and markets head back to all-time highs. That's the trade that I'm considering is going to play into effect here. If we look on the daily of the NASDAQ, we're getting near that 200-day, which people are anticipating is going to act as resistance. And then same thing with the S&P. Getting near what we would call now resistance, support turned resistance, broke right through it, and now we're below it. People are expecting to either get a lower dip and then buy the dip, or they're expecting for us to hit the 200 and then sell off. So I think either way, people are expecting markets lower, and I think the ultimate pain trade here is if we just head higher. So that's what I'm anticipating. The things that we're looking at that are set up, so we're in the yen. I'm still watching lean hogs, but it's currently not there for me yet. I would like to be getting on the long side, but it's not there. The Dow I'm looking at as well. This could honestly be a decent buy, but I think we've already dipped we've already kind of bounced off these lows, and it's just not a trade that I'm going to get into. It is set up, or it's close to being set up, but I'm not going to be getting in that yet. The yen short is basically the Dow long in a sense. It's the opposite trade. It should act, yen being short, if the markets go up, the yen should continue to go down, so that's kind of the same trade. I'd love to get in cocoa here if we got like a really good bounce, but I don't see a bottoming happening just yet. I mean, it's possible. We have these like large selling pressure, then we get some buying momentum, large selling, some buying, selling. It looks like it might be starting to bottom out, especially around the 7,700 mark, but I need to see more indication of that bottoming before I can go long. And the good thing with cocoa though is if you catch this, huge moves. I mean, imagine catching this thing right on this dip here, and then it went from 6,500 to it doubled. I mean, it had a double. That would have been a gigantic trade if you can hold on to it for the whole ride and then get out at the right time. Because you have to not only time the entry, but time the exit in this example. It's always easy with hindsight. But yeah, we're looking at coffee as well. Crude oil, I like where it's at. I like gold futures, long, that we are trying to get into. We're shorting silver. That's a hedge trade. And then the soybean meal we are holding on to. So I'm going to put this all in the weekly report. Not too much has changed this week, and we will talk again probably during the middle of the week. So thanks for listening. I'll also just briefly tab down here so you guys can see what we're currently looking at. Cocoa's set up. We're in soybean meal. We're in the yen. We are watching the Dow. We're watching actually, not something I have up here, but we're watching the 30-year yields, which looks like it's a close setup to going short. Coffee we're watching, lean hogs, crude we're in, and now we are in on gold. Stop at 29.80 and silver short hedge. Stop at 35.1, and that is a trade we have on. So we're going to highlight that in green. We're just waiting to get the limit order placed on gold, which I will move this up if I have to get the fill, but we're pretty close to it, so I'm just going to wait an hour and we'll see if it fills. But yeah, that's what we're looking at. Let me know if you have any questions or comments, and we will talk again during the week. Thanks for listening.